Today we're going to dive into the income statement, the comprehensive income statement. And basically this lecture is just going to inform you of the structure of the income statement in terms of you understanding the benefits and the disadvantages of the income statement. You should be able to read that accordingly throughout your textbook. Today we're going to just basically outline the income statement and its structure and break down each one of those parts. And so when we talk about the income statement, we pretty much already understand what the income statement does. It represents or it measures the income or the changes of equity, depending on how you want to look at it, within a period. And so we know what belongs on the income statement. You have your revenues, your expenses, and your gains and your losses. Okay? And so we already know what revenues are. We know how to generate revenues. We know what expenses are as well. The gains and the loss part may be fairly new to some of you guys, depending on how much you retain from your financial. But from this perspective, you need to understand that a gain or a loss can be realized, or it can happen or be created in the event that you sell a particular asset. If you sell a particular asset above its book value or below its book value, that will of course give you a gain or a loss. So for example, if you have a particular asset on the books right now with a book value of, let's say, 10, and you sell that particular asset for a cash amount of 15, then obviously the difference between the book value of 10 and the cash amount of 15 will give you a $5 gain. And vice versa would occur if you sold the particular asset at a price below its stated book value. Okay? And so we're going to look at right now the details of how the comprehensive income statement looks. Okay? So before we get into that, let's understand that the income statement is pretty much broken down into three major parts. Okay? And so your first part for the income statement is called income from continued operations. Okay? Your second part of the income statement is going to be called separately reported items. Okay? And your last part of the income statement is just your EPS. Okay? And so basically from our comprehensive income statement, we have these three parts. Okay? And so what we're going to do is we're going to take our time and identify each part of it. So the first part that we're going to talk about is called your income from continued ops. And I'm one of those guys who strongly suggest capitalizing off of the titles that are presented to you within accounting. And so we're talking about income from continued ops. So what are we really referring to? Well, we talk about how to measure income, and we understand how to measure income, right? And so we know from that perspective, when we're pertaining to income, we're actually talking about those revenues for that particular period that exceeds beyond those expenses, right? And so this section is basically going to display or illustrate any type of income that was derived throughout the period that results to continued operations. And when we say continued operations, we're talking about those normal day-to-day activities that this business is going to engage in through operations, right? And the fact that these are normal business day-to-day activities means that we expect this particular income or these particular measurements of the income to continue, right? And so this section is going to pretty much give you an idea of what you expect or you anticipate this company to continue to do, okay? And what you need to realize is that from the income statement approach, the actual income statement itself gives you the ability to predict future earnings, okay? And this kind of solidifies how you're able to do that. I mean, analyzing how the income is being generated based on its continued operations will give you an idea of what type of future earnings this company may be able to receive, okay? And so basically this part, this income from continued ops, is a pretty straightforward part It's an order that you just have to understand or memorize. Okay? And so let's just go into that particular order, right? And so you're going to always start off with your revenues, right? So you always start off with your revenues. And depending on if the company has selling products or is providing a service, it's going to dictate what type of revenues you have, right? But let's just say sales for this company. Let's say sales. So the company is selling stuff. So you start off with your sales revenue. Right under your sales revenue, you're going to subtract your cost of goods sold, right? And we know what cost of goods sold is. Cost of goods sold is simply that expense that is created whenever you sell an asset or sell inventory, right? So we're going to subtract cost of goods sold. Cost of goods sold is going to give us gross profit. So once you get your gross profit, you're going to start to subtract your operating expenses. Operating expenses. Now, generally speaking, we have two major operating expenses that you will always have as a part of continued ops. Okay? So the two major ones that you always have are called selling expenses and general and administrative. Okay? The difference between a selling expense and a general administrative is this. We know expenses occur whenever we have a certain event that's based on day-to-day operations. Well, if these expenses incur and they're directly related to the actual sales aspect of this company, then that would be considered a selling expense. Okay, so if you could directly trace that expense to the sales aspect of the company, then that's considered a selling expense. So I can give you examples of it. Let's say you have depreciation on a delivery truck. Well, that delivery truck, right, is directly tied to the selling part of it. So that would be considered a selling expense. What about the salaries for the marketeers, right? The guys who are dealing with the selling aspect of the company. If their salaries are directly related to the selling aspect of the company, then that salary expense will be considered a selling expense. Okay? What about the actual plant that produces the actual product? The depreciation on that particular plant, on that building, or that equipment, it's a product that's directly traced to the selling part of the asset. Therefore, that would be considered as well a selling expense. So you have to trace it back to the sales part of the asset, or the sales part of the company, I'm sorry. And so you have selling expenses, and you have general and administrative. General and administrative expenses are just every other expense that's not directly related to sales. So that's everything else. It just goes into there. So other salaries of, like, say, the accountants, those expenses that arrive from those salaries, well, it's not directly traced to the selling part of the business. Those guys who are working in corporate and stuff, that would be considered a general or administrative, right? Any depreciation on other buildings that are not directly related to that will go in general and administrative, okay? The other two operating expenses that you need to understand are also called restructuring costs and research and development. Okay, restructuring costs and research and development. And of course, all of these are going to be subtracted. And so what are restructuring costs? What are restructuring costs? Well, these are the costs that are incurred, or the expenses that happen whenever you decide to restructure your business organization. Okay? If it's any kind of form of restructuring from the business organization, it will be considered a restructuring cost. You may be downsizing. Sometimes you may have an expense arise for changing or letting go a couple of people or something like that. Okay? So what you have to understand is that these restructuring costs, they're reported whenever they happen. So they have to go into the period of which they actually happened. And so they will be considered an operating expense. They will have more examples in the book on what's a restructuring cost, but as of right now, this is basically what you need to know. Research and development, of course, that's the scientific approach, is how they come up with the design for the product, any kind of R&D that's related to it. It's considered an operating expense as well. So these are the 4 operating expenses that you must be aware of that needs to come from gross profit. When you subtract those operating expenses from gross profit, it's going to give you operating income. And obviously at this level of understanding, you guys should know that it's an income if it's a positive number, but it could be an operating loss if the number is negative, right? So after you get operating income, you're then required to add or subtract other income / expenses. Other income / expenses. So obviously you're going to add the other income, you're going to subtract the other expenses. And so these will consist of all the things that are not directly a part of your line of your business, right? These are still considered to be a continued operation, but it's not directly traced to your line of business, right? See, all these other particular components as of right now are directly traced to the line of business, with the businesses in the means of doing to generate revenues, right? And so these other income or expenses will be those components that happen, but it's not something that we directly do to generate the revenues for the company, okay? And so examples of that would be any interest, right? If you talk about a general business, right, interest that you may receive on a particular investment or any interest that you may pay on a loan, right? Those interest that you receive is a revenue. The interest that you pay is an expense. So those various interest components will always go in the other. So we're going to consider interest revenue / expense, right? And another part that may happen in continued ops would be the realization of gains or losses from selling their assets, right? So any gains or losses that may come from selling assets, those gains or losses are going to go here too. So you're going to plus or minus interest, revenue, or expenses, or you're going to plus or minus gains / losses from sale of assets. Okay? And the losses from sales of assets, all right? So those numbers are going to go there, and they could either be added or subtracted. Right now we're just going to put them in brackets. And once you net those, then you will get income from, you guys see that? Income from continued ops. All right, so this is going to be your number that you're working with to tie into what you're bringing forward in the next step of your income statement. You're going to get an income from continued ops, but this is before taxes. This is before taxes. So directly after that, your income from continued ops, the final number needs to be applied net of tax. You're going to hear that a lot. Net of tax basically meaning that you're going to net the tax effect to that particular thing. I think I'm going to do a quick another example on another lecture about net of tax so you can understand. But as of right now, this is before the tax effect. Right under that, you're going to have to show the tax effect. Okay. So after you take out or net the tax effect, that will then give you income from continued ops net of tax. And this will be the very final component of your income from continued ops. And so if you just memorize this order, this will give you at least 50% through the income statement.